Mortgage applications are up. That's our topic for today's Backstage Pass. Well, good morning. Stocks are up so far this morning. Mortgage bonds are flat after opening higher. They've come back down to flat. It means mortgage rates opened up a little bit better, but they've already repriced for the worst today. We'll talk more about that in just a minute, but first let's jump into the data for the day. So Mortgage Bankers Association released their application data, and this showed that applications were up slightly last week, week over week, but it may not be from what you would expect. Purchase applications actually fell by 1% last week. They're down 19% year over year. Interest rates lifted just a little bit last week. The average interest rate went from 5.43 to 5.47% last week, but still down well lower than the highs that we saw back in June. But here's the interesting story. Refinance applications, those lifted by 4% last week. And some people may say, well, why? Interest rates are so high. Why are people refinancing? Well, there's a record amount of home equity in the United States right now. And so there's no wonder, it's no surprise that as interest rates are starting to dip just a little bit, that people are looking for access to that equity in their homes. So by doing a cash out refinance. And why would people do that? Consolidate debt, lower your monthly payments by consolidating high interest debt, or maybe some home improvement. So as these rates have started to dip and we have this massive amount of equity here in the United States, no surprise that people are looking for ways to access some of that cash. Now, also data released yesterday from CoreLogic showed that home loan health in the United States is the healthiest it's been in probably about 23 years. Now, these loan performance insights are from the month of May, so they're a little lagging behind just a little bit, but it shows that mortgages that are 30 days or more delinquent fell to 2.7%. Mortgages that are 90 days or more delinquent fell to 1.3%, and homes that are in foreclosure, well, that's at 0.3%. That's a multi-decade low. The 30-day late is a 23-year low. So great news as far as home loan health in the United States. Now, data that was released today, we've got a little bit more inflation data that came out today. We have the Producer Price Index, PPI, and this is a measure of wholesale inflation. Now, the PPI data shows that wholesale inflation fell by 0.5% for the month of June. That was way better than what was expected. 0.2% increase was what was forecast, so much better. Year over year, PPI declined from 11.3% to 9.8%. Again, much better than what was forecast. And a lot of what was contributing to that is the drop in gasoline prices. Gasoline dropped 17% month over month, and that contributed to about an 80% of the decrease in that headline data. Now, in the bond market, initially the bonds reacted positively to this PPI data, and mortgage bonds opened up the day 20 basis points higher. A lot of lenders priced their rate sheet off of that initial data, but since then bonds have started to recede, and they're now about flat, about 2 basis points higher on the day. The 10-year yield is about 6 basis points higher on the day, and that's really, we've seen some of the lenders that opened up early, they've already repriced for the worse on today's rate sheet. And if you look at the chart that I'm putting up behind me, you can see that the mortgage bonds are being squeezed, and it's inside what's called a pennant formation. So you can see how it's getting more and more narrow, that range for the mortgage bonds. And what winds up happening in a pennant formation is that eventually there's a breakout, and it's typically in the direction of the trend. So right now, mortgage bonds over time, if you look at this chart, over time, mortgage bonds are trending up. And so we are hoping that we could see a breakout to the positive, to the upside of this pennant formation. If we do, that would be a great thing for mortgage rates. Time will tell. It doesn't always happen that way, but traditionally in a pennant formation, it breaks out in the direction that the trend line is going. That would be great for mortgage rates. However, for right now, today, mortgage rates after the repricing and everything, national average is about 5.3% on a 30-year conventional fixed. And so national average about 5.3% with no points. If you want to get below 5%, hit that 4.99. You're paying about half a point today. Now that's all the news that we have for today. Remember to stay positive. Hope you have a great day, and we will see you tomorrow.